Good evening, I'm Giuseppe Basile. I'm the mentor and analyst you can find at the website www.fibstalkertrading.com. I also have a blog and you can subscribe this newsletter at fibstalker.com. Good evening, today is Sunday, February the 8th, 2015. It's 10 to 11 p.m. time in Toronto, and this video is reserved to my newsletter subscriber. In this video I'm going to review for you the 13 markets I follow. Let's start from the euro dollar. The euro dollar has seen a very long move lower here, and 2 weeks ago we had, sorry, 3 weeks ago we had now this important development, 112.06 being pierced on the downside, and this is an indication that this area of potential support here is gone, and we are in a situation where we can see much lower prices in the euro. Now, in the past few weeks, I've traced this opposite measure move to 139.67. This move has a first target at 108. That's why in the last few weeks I mentioned that probably see this market lower, at least into this 108, before we can see a move higher. Now, so there is really not a lot to do in this market on the long side. When we drill down into the daily time frame here, we can see that this market has been in longs recently, and we had a sequence of measure move. The first one actually found participation at this 112.55 and progressing to the first target. However, the next measure move was not respected, as we can see here, and at the moment this market is finding support at the all the way halfway back. Will this hold? I'm not sure about that. As I told you, the weekly time frame shows still this market has to move another 500 pips and get into that 108, where there could be some profit taking on the weekly time frame. So I don't trust a lot this area of potential support. If the sequence of measure move breaks again here, this is a long, as it was in last week, the end of February, as well as 2 weeks ago, and as well as last week. We saw this market reacting, and in both occasions the market offered a fair trade. Moving to the S&P500 here, we have the market, if we go back to the weekly, we have the market on top of an extension long here, identified well before the fact, and that's an extension from 2000 highs to recent highs. We saw participation, and the market did not get into that first target just yet. Current contract has this target at 2095. It was 2100 in the previous contract. When we move to the daily time frame, again we identified before the fact this area of potential participation, and we timed it with the Fibs Talking timing technique. The market is now moving laterally. Long or short failed to support or push this price lower respectively. So this price is moving laterally at the moment. This 1967 entry here is never challenged. The market never offered another opportunity to enter long. So when we look at the 4-hour time frame here, we can see the market actually moving in extension higher, and we could see the participation at this 2023 area, bringing price into the 2061, and the next measure move is going to be the same anchor, new highs here, and that's the extension where we could see participation in this market. Moving to the dollar index then. The dollar index of course is continuing its move higher as the Euro continues its move lower. This market is actually trading in extension here, and we have to find the anchor that explains the recent lows here, which have been retested, and that's going to be the anchor that explains price here. We had this participation at this level, but clearly this is not the level that is explaining that move. So we have to find the level, and the level is this 91.50. So we saw participation twice around this level, and if price continues higher, the euro would actually continues lower, and this extension higher would actually bring the dollar. Let me change the scale here. Let's see what it could bring the dollar. It could bring the dollar to that 96.90, very close to 100. If we look at the weekly time frame, in fact, you will remember that the the dollar index is actually pushing into that 99, 93, 100 basically. So whether it's going to pick up from here or we'll need to retrace into that 92.83 is not given, is not established at the moment. We'll need to wait for that. Moving to gold. Gold has actually been reacting on top of this potential area of support starting at 12.29, trading this area 1, 2, 3 times, and we started seeing a reaction higher. Now, during this reaction higher, and I want to remind once again that gold is moving apparently at the moment in unison with the ECB, European Central Bank balance sheet. So if it will resume the move higher, it could be a hint that the European Union, the European Central Bank is actually willing to rebuild their balance sheet. If that's not the case, we should see this market again going into this area of potential support. Now, when we move to the daily time frame, we can see that, and let me change the scale again here. We can see that the measure move, the sequence of measure move has not been very clean, and initially we have a move from lows to highs after the sequence of measure opposite sequence of measure move failed. We saw price getting into the first target, and the next ambush also did not play cleanly, which gives us an hint. Although price went into the second target, right into the second target, gives us an hint that this market is going to retest again the old way halfway back here, and that could happen this week. So based on how price will behave when it gets into this 12.19, we will have an understanding of whether gold is going to continue higher, and also which means that also the ECB starts rebuilding their balance sheet, or just a continuation lower to try to meet again support and participation on the upside in this area starting at 12.29. Moving to the US dollar versus Japanese yen, another very interesting market. We know that on the weekly time frame this market has reached first and second target, and actually it went well beyond that second target, as we can see here. And at the moment the weekly time frame in this market is neutral, but the daily is still pushing higher. Let me show you why I believe the weekly time frame is neutral. It's neutral because the next measure move where the weekly algorithms will be interested in picking up this price is going to be 12.83. However, in this market we have seen a very clear and clean sequence of measure move on the daily time frame, and this measure move is visible also on the weekly time frame here. In fact, if I if I trace it properly from lows to highs here, I'll show you that that 105.50 45 has actually had participation bringing price into the first and second target, and the next measure move, which was an extension, also found participation here. So there is clearly participation at this 116 level. The 116 level has actually came into play a couple of times here, and we can see it much clearly here on the daily time frame. At the moment, after that second bounce, the sequence of measure move was not clean, so it is an indication, potential indication that that this market could actually retrace as soon as it gets into that 1960 there. Okay, if that happens, there's the potential for the 115 116 level here to be tested once again. Again, the weekly is neutral here until price will get into, if price gets into 112.80. Moving to the euro versus Japanese yen, with this market, and I will start from the weekly here. This market is you remember that this market was in a sequence of measure move, and at the moment this market came to test a potential extension long here, which I mentioned 2 weeks ago. However, on the daily time frame on the weekly time frame following the sequence of measure move, we want to remind you that initially there was a measure move that was actually respected and then failed, bringing price into that first target. And I mentioned that after that would happen, we could actually see this price retracing. Now there are two levels we have to watch. One is all the way halfway back here from the lows in 2012 to highs, and that level is at 122, and the other would be an extension long after this move higher, and that's something that has been tested 2 weeks ago at the beginning, 2 weeks ago here, as you can see here. However, there is still the possibility for this market to get into 122. If that's the case, I'm going to use one of the pattern that I teach in my Fibstalker Methods coaching program, and this level has been tested at the end of last week, and this level could actually push price lower. The 135 here could actually push this price, being an extension into the 124.16, helping price into that 122. So at the moment this market will move laterally between the 130.68 and the 135.35. Next will be pound versus Japanese yen, and this market on the other hand is still in a sequence was actually in a sequence of measure move long. However, it hit this important area of potential resistance. So now the sequence is still let's go and look at the sequence of measure move that we had, and this sequence is very well visible on on this time frame here. There was participation this 165.80, and then the next measure move also pushed price higher, was participated by algorithms that could be timed using the Fibstalking timing technique here, and that brought price into that first target 186.50, and after that I mentioned that we could see this price into the next measure move, which would be from highs to highs here. As you can see, that next measured move has not been tested just yet. That's still a long. And if sorry, let's go back to the pound versus Japanese yen here. And if this level was to be tested, we would need to see what happens at that level. And always remember that this price is within an area of participation short. The daily time frame has not yet confirmed, sorry, the weekly time frame has not yet confirmed the short. Now, if the short was to continue, we would see a participation on the short side right at that 182.61. So if this week you see price getting into that level and that area of potential resistance and the prices reverses, there is the possibility to see 173.22 and potentially a possibility for a continuation lower. If that's the case, is the 169.33 is pierced on the downside, we are going to see this price in the coming months retesting all the way into 153.32. Moving to the euro versus the Canadian dollar, for this market you will remember that we had to wait it to retest the 138.50. Without that, we could have no longs, no consistent and persistent participation on the long side. And in fact, as you could see here, when back in end of November last year we saw a reaction higher, the price eventually had to come back to test that area of participation. So that area of participation was tested, they gave a first free risk trade, and then they gave a second free risk trade here, and there is the potential for this market to continue higher. Now the on the smaller time frame here, on the daily time frame, we are seeing a potential reaction into the all the way halfway back, which is already trading here. So if this week we see this 144 sorry 141.44 being participated here, there is the possibility to see price at previous highs. Now remember that above these highs, and actually right at that target there will be also some resistance coming from that 160 146.70 level there. Moving to the pound versus US dollar, reviewed in a very in detail this measure move, the sequence of measure move here short, and it was actually verified that now this sequence has failed. So the sequence of measure move into the sequence of measure move short here has failed, and has failed actually right into that area of potential support here, which we can see here starting at 153.49. This is the all the way halfway back from the lows in at the beginning of 2009. So there is for this market the potential to retrace into two levels. One is the 159.54 and there is the 160.73. Moving to the Australian dollar versus US dollar, this market, as you know, on the weekly time frame has reached a second target, and that's very clear when we trace from the highs in 2012 to lows here, and we saw this price getting into this 073.53, and now there is the possibility for this market to retrace, and retrace into what? Retrace potentially into the all the way halfway back, all the way here into the next extension long, and that's the very long term retrace here we can see. So if price participates at this weekly level, if algorithms participate at this weekly level here, weekly area of support, there's a possibility to see this market into the 083.30 38. The US dollar versus Canadian dollar is actually finally feeling the participation on the short side here. As you know, when we put this in context, this market entered this area of potential resistance and potential participation of algorithms on the short side, and we know the level. The level is already traced here. We know the level of potential participation on the upside here if this price has to continue higher, and that would actually come at 120.38 here, and if that happens and we see participation at this level, there is the possibility for this market to just continue higher and challenge this area potentially, and for a continuation higher. And that's true especially if the dollar actually goes higher and continues higher against the euro as well, which would actually bring price into there is a potential for, in the long term, to have the Canadian dollar back into 160. Moving to the New Zealand dollar versus the US dollar, that's the second last market here. This market has actually reacted to went close to the two levels here that I'm looking at. You will remember that this market has failed the larger measure move here on the weekly time frame. That's when we saw price below that 74.30 level here, and now there is the potential for this market to get all the way into this 068.63. How is going to do that? We identified a couple of levels. Apparently they're not being tested just yet, and certainly those two levels are quite important. The first one actually has been tested here, as you can see. You can remove the other long-term level here. Let's see, and the first one has been tested, and as you can see, it also provided an entry of this trade in this market, so there is the potential for this market to just continue lower. If that's the case, see how this extension is positioning price, the second target, right into that potential area of support there. Okay, and finally, moving to the US dollar versus the Swiss franc, we saw participation right at that 50% from lows to highs, and now the market is being challenged at the opposing 50%. And as you can see, we saw participation of this market at that level, right at that 093.45, very technical market, which indicates lots of participation as well. And this market has the potential now to retest the next measure move long, the 094.45. If the market gets there and then jumps higher, we see participation there. We are going to challenge this 093.45. And this is it for today and this week. Thanks a lot for watching this video. If you are interested in my work, you can go on www.fibstalker.com or fibstalkertrading.com if you are interested in my coaching program. Thank you very much, and have a great trading and non-trading week. Bye bye now.